Good morning, everyone. Today we will start with the second unit of R, right? Basically, in part 2, 3, 4, we'll be talking about some balance sheet items. Like in part 2, we'll be talking about all the current assets like cash and cash equivalent, trade receivable, inventory. And in part 3, we'll be talking about non-current assets, that is property, plant and equipment investments. And in part 4, we'll be talking about trade payables, then we'll be talking about notes payable, equity and all, debts, right? So we are starting with the second unit of R, which is completely related to current assets, right? Now part 2, 3 and 4, this will be around 30 to 40% weightage in your exam, okay? So let us start with unit 2, that is part 2. And in this part 2, we'll be first talking about cash and cash equivalents, right? Now, when I talk about cash, it means coins, currency, right? And there are a lot of items which comes under cash and cash equivalent, okay? Right. So when you talk about cash, it has to be cash, coins, currency, right? And when I talk about cash equivalents, right? Then in that case, we'll be talking about some liquid investments which has a maturity of less than 3 months, right? So when I talk about cash, includes coins and currency. It also includes demand deposit with banks or FI, financial institutions. And if I talk about cash equivalents, includes short-term liquid investments, period of holding less than 90 days, right? So these are the items which comes under cash and cash equivalent. When I talk about cash, it means coins and currencies. It also means demand deposits, which are held with banks or financial institution. Cash equivalent includes short-term liquid investments, period of holding less than 90 days, right? Few more examples of cash and cash equivalents are like money orders, bank drafts, right? Then we have treasury bills. We have certificate of deposit less than 90 days. We have commercial papers. Now, if you have a fixed deposit whose maturity is more than 90 days, then it cannot be classified as cash and cash equivalent, right? So we have bank drafts, money order, treasury bills, certificate of deposit less than 90 days, commercial papers, right? So these are the some examples of cash and cash equivalent. We have compensating balance. Now, this is the requirement of a lender, which requires the borrower to keep a certain sum of money for some financing arrangements. This is compensating balance, right? Basically, you can tell it as that it is just a collateral which needs to be kept with the lender, right? So compensating balance basically means the cash set aside by the borrower in order to avail some financing arrangements, right? So those are compensating balances. Now, some cash may be unrestricted, some cash may be restricted cash, right? Now, what is this restricted cash? Restricted cash means cash set aside for some purpose. For example, purchase of PPE, property, plant and equipment. Right. We have done in our +2 level that that every property, plant and equipment which any plant and machinery which we purchase needs to be replaced after a certain number of years, right? So again, we have to arrange for these funds. So every year, what we do, we set aside some part of money so that at the end of its useful life, we can buy the new one, right? That's a sinking fund method of depreciation, right? So we have done this thing in our +2 level. So whatever cash we are setting aside, that is restricted cash, right? So it can be for cash can be restricted for current obligations or long-term obligations, right? And accordingly, cash will be accordingly cash will be shown in balance sheet, right? So if cash has been set aside for meeting some obligations in the next 12 months, so we are going to keep it in current assets. And if cash has been restricted to meet the purpose of some plant and machinery, then we will show it in non-current asset, right? But anyway, restricted cash must be shown separately from unrestricted cash. So anyway, we need to show it separately. Now the point is that whether we are going to show it in current asset or whether we are going to show it in non-current asset, that clearly depends upon the purpose of its use, right? The purpose for which it is set aside. So this is the meaning of cash and cash equivalent along with few examples, right? Now, one more thing which you need to note is the uh, the nature, amount, timing of restriction should be disclosed in the footnotes. Right. So let me quickly brief you what we have done as of now. We are studying items of current asset, and we have started with the first item, that is cash and cash equivalent. So cash basically means coins and currencies. It also includes demand deposits kept with any bank or financial institution. Cash equivalent means short-term liquid investments, period of holding less than 9. Compensating balance, basically it's a balance kept by the borrower in order to against some financing arrangement, right? Um, Basically, you can call it as a collateral kept by the borrower, right? So these are the few examples of your cash and cash equivalent. Now there is a concept of restricted cash and unrestricted cash. Restricted cash means cash set aside for some purpose, like for purchase of PPE. Uh, Cash can be restricted for some current obligations or long-term obligations. Accordingly, cash will be shown in balance sheet. If it is restricted for some current obligation which needs to be met in the next 12 months, so in that case, we are going to show that restricted cash in current assets. However, if that cash has been restricted from some long-term obligations like purchase of property, plant, and equipment, so in that case, we are going to keep it. We are going to show it under non-current asset. Whatever may be the case, we need to show it separately from unrestricted cash, right, in the balance sheet. Further, the nature, amount, and timing of restriction should be disclosed in the footnotes. Okay. So this is the definition of cash and cash equivalent. Okay. Now, one more thing, when we talk about cash and cash equivalent is bank reconciliation, right? So next topic of discussion will be uh, bank reconciliation, right? Uh, Basically, every week, rather, or every month, depending upon the volume of transaction you're handling, you need to reconcile your cash book balance with the balance with the bank, right? So bank reconciliation is prepared to find out differences between uh, cash book balance. Cash book balance means balance as per depositor's record. Balance as per depositor's record and cash balance. reported by the bank, public financial institution. Now, basically, what is bank reconciliation statement? Basically, there are timing differences, right? Suppose I deposit a check today, right? The same day it won't be collected by the bank. What is the process? There is a process of collection. Once we deposit a check with the bank, my banker will send it to the issuer banker, and issuer banker will check whether sufficient funds are there in the account who has issued the check. Accordingly, money will be transferred, right? So earlier, uh, before this digitalization and all, uh, my banker used to send physically the issued check to the issuing bank, right? And then issuing bank used to check it and uh, confirm to my bank that okay, I'm transferring the funds, right? I'm sending you the money. So, but due to this digitalization, things, the timing which used to take in those days is far reduced in today's digitalization process. Okay, so but still there are some differences. The bank reconciliation is prepared to find out those differences between the cash book balance, that is balance as per depositors record, with how much money I have kept with the bank, and cash balance reported by the bank. Suppose I am depositing currency, coins and currency. The day I deposit, the same day it will be reported by the bank. Suppose I am withdrawing money. So the day I am withdrawing, the balance in both the depositor record as well as balance reported by the bank will be affected, right? So for cash deposit oblique cash withdrawal, both the depositors record and right. So if it is with respect to currency, right, currency deposit and withdrawal, so the day I deposit, right, I will increase my cash balance with bank, and the same day they have received it, so accordingly they will also increase the cash deposit held, right? So as per depositor, whenever you're depositing money with the bank, right, whenever you're depositing money with the bank, uh, it is an asset for you. And as per bank, whenever I am accepting deposits from the company, right, from the account holder, it is a liability for me, right? So anyway, for cash deposit, both the depositors record and balance reported by the bank will be affected. Similarly, for cash withdrawal. So with respect to there is no timing difference. Is due to this there is no timing difference. But when I talk about check, right? Person making payment through check, or I am issuing check. In that case, there are some timing differences. So let us first identify the causes of difference, right? Um, Causes of difference between depositors record and bank record. So one we have check deposited but not yet collected by bank. So today only I have deposited, but it is not yet collected by the bank. So in this, what is happening? It is recorded in cash book, but not recorded by bank. Now, the day I will issue check, suppose I issue check to you today at around 2 o'clock. So by the time you reach your office, it will be 4 o'clock. So bank closes at around 3:30, right? So anyway, you are going to deposit that check tomorrow, right? And if there's a delay in depositing, again the your bank will send to the my bank the day after tomorrow, right? So basically, the day I am issuing check issued, but not yet presented to bank, because until and unless it is presented to my bank won't make the payment, right? So again, this is recorded in cash book, but not paid by bank. So anyway, if it is not paid by bank, so not recorded by bank. Now, bank charges deducted by bank. Now, this is something which I will come to know only when I update my passbook or only when I get the statement from the bank, right? So there are some services which has been provided by my bank or financial institution. Against that, they might levy some charges, right? So whenever you fill you fill the application form, when you open account with the bank, there are so many things written in small words, and it ranges between 20-30 pages. So it is not possible for a particular person to read the entire document, right? So what do? You simply sign it. You trust your banker and all, so you simply sign it. But whenever after that, when you do some transactions through bank, or when you use some services provided by the banks or financial institution, they levy some charges. So any particular individual will come to know about those charges upon updation of the passbook, or when the statement is given by the banking firms, right? So these are those charges which has been recorded by the bank, but not recorded in cash book. Means it is not known to the depositor, right? Not known to the depositor, right? And number D, um, collection done by bank on behalf of depositor. Right. So collection done by bank on behalf of depositor. Right. Again, this thing is same as bank charges. So whenever the bank is collecting on my behalf, I will only come to know when I update the passbook or when I get the statement updated, right? So again, this is recorded by the bank, but not recorded in cash book. Again, this is something which is not known to the depositor. We have dishonor of check. बोलो चार्जर देने के लिए बोलो नहीं को. Suppose I have deposited a check received from my customer, and my banker will send it to the customer banker, and the customer banker returned it, saying that the person who has issued the check does not have sufficient balance. So this is non sufficient funds, right? Basically, dishonor of check, non-sufficient funds, right? Money not collected by the bank. Money is not collected by bank. Um, so basically, we are finding that we need to reverse the entry for check deposited. We need to reverse the entry for check that we have deposited. If it would have been collected by the bank, then bank would have increased the balance, right? But since it is non-sufficient funds, right? Now, sometimes bank does the noting that see, I need to reclaim, right? I need to reclaim from the customer. So I need to have some proof that you gave me a check which I deposited into the bank, and bank send it to your banker, and your banker refused to pay as non-sufficient funds. So there's a kind of noting, right? Sometimes some charges might be deducted by the bank for noting the statement of dishonor, right? Same treatment as bank charges deducted by bank. Sometimes some charges might be deducted by the bank for noting the statement of dishonor. So it is the same thing, right? So we are going to do the same treatment. There is no such change, right? We'll do the same treatment as bank charges deducted by bank, right? Now there are a few more points like interest income. Except current account balance, if you have some demand deposits with the bank provides interest on that in saving, right? And RD, FD, but bank do not provide any interest income on current account balance. So again, this is um, recorded by the bank, but not yet recorded in cash flow because not known to the depositor. Right. So these are a few causes of differences between your depositor record and your bank record, right? So this is basically deposit in transit, right? Whenever you collect a check from customer, then and there you record in cash book. You increase your balance with bank, and bank will record it only when it is collected by the bank. So as of now, it is not collected. Then we have check issued but not presented. Same thing, you have issued it, but as of now, they have not yet presented it. They might have deposited to their bank, but their bank has not sent to us. So until unless they send it to us, we won't make the payment, right? Simply I have issued the check. Let the receiver come to me and show the document. I won't go and check. Oh, my person has issued you check. Let me pay you. No, no. In Hindi वैसे जिसको लेना है अपने आप आएगा, right? So this is the concept. Then there are some charges and deducted by the bank. So which we will come to know only when we update our statement. So this is recorded by bank but not recorded in cash book. So this is again not known to the deposit. I don't know it, right? How much charge the bank will deduct. So there are some collections which are done on my behalf by the bank. Again, this is first recorded in the bank statement, and I'll come to know only when I update the statement, right? Then there is a dishonor, right? This is dishonor of check. I deposited, my banker sent to your banker is saying the person who has issued and does not have sufficient balance. So it is returned. So money not collected by the bank. So we need to reverse the entry for check deposited in the depositor's record. Sometimes some charges might be deducted by the bank for noting the statement of dishonor. Same treatment as bank charges deducted by the bank. Then we have interest income. Like bank charges, this is also one thing which I will not come to know before I update the statement or get the bank statement. So again, this is recorded by the bank, but not yet recorded in cash book. Right now, this is cash book balance as per depositors record, right? So debitors increase. um, we have credit decrease. Then we have cash balance reported by one. Now, always remember one thing: we increase our cash book balance, right? This is balance with bank, and this is balance held for depositor. So this is an asset for us, and this is always a liability, right? So simple funda is whenever we deposit, right? Check deposited. So we will increase our balance. Now they will increase the balance held only when check deposited is collected by bank, right? Check deposited. So the moment I deposit with the bank, I will increase my depositor record. I will increase the bank balance, right? So this is current asset, right? Balance with bank. This is current asset. For me, I'm only concerned about me, right? And then the moment I issued check, I will decrease the bank balance, right? But out here, check issued presented for payment. Till it is presented for payment, it won't. The bank will not. The bank won't reduce the depositor balance, right? So there is some timing difference, right? So like this is day one, and this is happening on day three. Again, this is day one. This is happening on day three, right? Now there might be a case that bank charges, right? So again, there might be a case that this is happening on day one, and I have updated on day three. Day three, bank statement updated, right? So on day three, I will do bank charges, right? Something sort of this. Similarly, day one, interest income. So again, this I will come to know day three, interest income upon updation, right? So there is some timing difference. You can easily see that. If day one I deposit the check, I am increasing my balance with bank. But bank balance will only increase on day 3. Similarly is the case with check issued. The day I am issuing the check to trade payables, I am reducing my balance with bank. But the same day, balance held by bank is not reduced, right? Only when it is presented. Now, day one, bank has deducted my bank account, but I haven't updated it. So I will record that charges after some days. Right? Now the point is that I am preparing bank reconciliation statement on day 2. I am preparing bank reconciliation statement on day 2. Bank reconciliation is always prepared as on. So if I talk about as on day 2, as on day 2, cash balance as per depositor's record is not matching with cash balance reported by bank. Simple. Now, what are the differences? If you see as of day 2, this is deposited, but this is not yet collected. So we can see that number of one difference is right. So the very first difference is check deposited, not yet collected. That is deposit in transit. Then we have check issued, not yet presented. We call it as outstanding checks. Then as of day 2, bank charges deducted by bank, but not recorded in depositor's record. And interest income provided by bank, but not recorded in depositor's record. Right. So these are the few differences which we have noticed as on day 2. But if I prepare if I check on day 3 end, then all these 4 are appearing here and all these 4 are appearing here. There won't be any difference. But if I prepare on day 2, this is not here on day 2. This is also not here, and these 2 are not here, right? Just the reciprocal. So we find some transactions are recorded in depositor records, some are recorded in this thing, bank records, right? So that is why there is a necessity that we need to prepare bank reconciliation. Remember one thing, bank reconciliation is prepared as on. It is not prepared for the period. Right? As on day two, there might be difference, but as on day three, there may not be any differences, right? So this is prepared as on a particular date to find out the differences between the cash book balance as per depositor record and the cash balance reported by the bank. For cash deposits and withdrawal, there are no such differences. And with respect to check deposited, with respect to charges, interest provided by the bank, there are some differences. So we need to prepare this reconciliation and get it done. Okay. So now what will happen? They might provide you with cash balance as per they might provide you with cash depositors report, and they might give you cash balance as per bank, right? Both these balances are different. Basically, we need to reconcile it, right? Let me just take some figures. 10,000, 4,000, 500. Okay. So now, as on day two, you can see that cash balance as per depositor record is 6,000, right? And cash balance as per bank, 2,000 they have provided and 500 they have deducted. So that is coming to 1,500. Now, first of all, record transactions which are not recorded in depositors record oblique wrongly recorded in depositors record. This is very important, right? So out of this is recorded in depositors book. This is also recorded in depositors book, but this is not recorded in depositors book. So you need to only take those transactions which are not recorded in depositors book. Like if I talk about bank charges, right? I will reduce my balance 500. If I talk about interest income, I will increase my balance by 2000. So as a result, I'm getting 7500. This is adjusted cash balance as per depositor's record. And you'll be surprised to know this is the balance which will come in balance sheet. This is balance sheet value. This is also known as true balance. Right? Now this balance needs to be reconciled with this 7500. The ultimate objective is to bring your balance reported by the bank to true balance. I have to bring this 1500 and make it 7500. So for that, what I will do? Reconcile transactions which are not recorded by bank oblique wrongly recorded by bank. So we have deposit in transit. Think that it is collected today. If it is collected today, then I will increase balance held by 10,000. Think that it is issued today, right? So it is paid today, outstanding checks. So I will subtract 4,000. So as a result, I can arrive at this true balance. This is true balance. That is balance as per depositor's record. Okay. So we need to do a lot of practice with respect to this reconciliation, right? Let me just give you a few more. Okay. So what we need to do, we need to find out the causes of difference first. And you're very lucky that they will be providing you with these causes of differences. Okay. So we need to start with your depositor record cash balance and do whatever is not recorded yet in your depositor record. Simply record these. You get true balance, the balance sheet value. And you need to bring your balance reported by the bank to this true balance. Remember these two. Record transactions which are not recorded in depositor's record, and reconcile transactions which are not recorded by bank yet. Right? So let us do one example which will help you to get more better clarity. Example, companies record should cash balance of 8650 as on 30th November, year 2. Balance reported by bank dollar 6050. Bank charges deducted by bank noting charges okay. So these informations are being collected from the bank statement. Okay. Other informations like you have deposit in transit dollar 3000, outstanding checks dollar 500. Determine true balance. Right. So I told you that we'll be starting with depositor record cash balance, and we'll be adjusting which are not recorded in cash books. So like deposit in transit and outstanding, these two are recorded. So these two are not recorded. This noting charges and non-sufficient fund charges, right? It can be the check or the charges, anything. Cash balance as per depositor record is $6050. Now you can easily see that this charges is not recorded in cash book yet, and this non-sufficient check, this is recorded, but I need to reverse, right? I told you. We need to reverse the check deposited entry. So at the time of depositing, we increase the depositor's record. Now we are going to less it, right? So bank charges deducted by bank. So this is minus 10. And we have non-sufficient check or the noting charge, whatever, minus 90. Because we increased at the time of depositing, so now we are going to reduce it because it is not going to be collected. So we have this thing dollar. Sorry. This is dollar 8650. We need to start with depositor's record. And we need to consider only those which are not recorded in cash book. This is not recorded in depositor's record. This is also not recorded. But these two are recorded in depositor's record. Right? So the only thing we need to consider is the ones which are not recorded ones. So we are getting 8550. So this is adjusted cash book balance as per depositors record oblique balance sheet value oblique true balance. This is what we are going to show in balance sheet. Now bank balance reported by bank. This is dollar 6050. So assume that this deposit in transit is collected. So if it is collected, I will increase it by 3000. Assume that outstanding check is paid. So I'll reduce by 500. So anyway, I'm getting the rate 550. Balance as per. So our first aim is to bring the balance to true balance. So what is the step? First, we adjust the depositor cash balance with items not recorded in cash book. Then bring the bank balance reported by bank to adjusted cash book balance with items not so firstly adjust the depositor cash balance with items not recorded in cash book. Then bring the bank balance reported by bank to adjusted cash book balance with items not reported by bank. So ultimate, my aim is to bring depositor record and bank balance reported by the bank to true balance. दोनों को मेरे को true balance में लाना है. I have to bring both the balances to true balance. And this is the balance which we are going to show in balance sheet. Right? So that's it from this cash and cash equivalent. The only thing is left is practice, practice, and practice. The more and more you practice, the more grip you get, right? Because this is one of the easiest topic of your curriculum. Okay. So next we'll be starting with trade receivable.